US has launched attacks on Iran in a Sunday strike and officially entered this war between Iran and Israel.
The world braces for Iran's response after the United States deployed bunker-busting bombs across 3 nuclear sites.
The Iranian Parliament has agreed to close the Strait of Hormuz in retaliation, but Iran's Security Council will be still taking that final decision.
Now, all eyes on the Strait of Hormuz, used to transport as much as a quarter of the world's oil.
Even a partial closure can disrupt global supplies and send prices soaring. The strait is critical for energy exports from Saudi Arabia, UAE, Iraq, and others.
The Strait of Hormuz, at the entrance of the Persian Gulf, is one of the world's most strategic choke points. 6 of the world's top crude oil and liquefied natural gas producers are located in the region, with financial analyst groups estimating the price of an oil barrel could jump by 50 to 70%. This would cause inflation to spike, with dire consequences to the world economy, especially to Asia.
I wanted to talk about how markets can be manipulated. We've seen these kind of unprecedented lack of a reaction to prices and threats of closing the Straits of Hormuz, and yet we don't find any changes significant in the oil futures markets. Can you give me your perspective on that?
I'd say we're celebrating bizarro world.
Today, the market breathed a bullish sigh of relief when Iran simply fired ordinary missiles at our military bases in the region. At least so far, there haven't been any casualties. President Trump said Iran gave them advanced knowledge of the missile attack.
14 missiles were shot at us the other day, and they were very nice. They gave us warning. They said, we're going to shoot them. Is 1 o'clock okay? They said, it's fine. And everybody was emptied off the base, so they couldn't get hurt except for the gunners. Out of 14 high-end missiles that were shot at the base in Qatar, all 14, as you know, were shot down by our equipment. Amazing stuff. Amazing that they can do. It's like shooting a bullet with a bullet.
So we're in a time that arguably is certainly one of the most dangerous, volatile times in the real world of our lives. That's the real world. The one thing the financial markets are absolutely certain about is there's nothing happening. They evidence dead calm through that period of time. That's what's so bizarre about it.
What are we not thinking of in terms of the market action? Why are we higher? Why is vol down? All these things that you wouldn't have thought.
Crude oil being down 6%, absolutely not. The S&P rallying the way it did, no. Given what we heard on Friday into Saturday or into Sunday, no. So that's why it becomes such a difficult game to play.
What should we be seeing in a normal market?
At least some volatility. There's no volatility at all. Regardless of what you think about the direction of things, should interest rates be going up or down? What should oil prices be doing, or gold? There would be some movement. And there's none, really. Dead calm is evidence.
This is the point. Israeli markets up, crude barely budging. The dollar's a little on the front foot. Nothing signals at the moment serious concern.
The big takeaway that, people should tuck away and keep in mind and take out again later is their ability to control the financial markets. So it's this massive hidden hand capability to just put a blanket on it and stabilize literally everything globally. It's not just one financial market, it's all financial markets globally. So that will also mean that when all hell is breaking loose in the financial markets, that's because they've decided to do that. That's what I suggest that people remember.
How do you think markets are manipulated like this?
I can just say I've seen signatures of it for a long, long time. And people didn't really notice these things, but, it used to be that the markets would fall, things would get cheap on selling, And then people would say, oh, buying has come in to buy the dip, to take advantage of opportunities. And then quite some time ago, over 20 years ago, I started noticing that on bad news, the markets would go straight up on bad news when it hadn't even fallen. And that would be reported same day or the next day as the market had gone up on people buying the dip. But if you would look at it, there had been no sell-off. There had been dip. It would just go straight up on bad news, on something bad. How do you explain that?
Israel has struck Iranian oil storage facilities and parts of Iran's biggest natural gas field as well this weekend. But that's not having an impact on the price of oil, perhaps something of a surprise.
I think the big part of this story is not that oil moved last week. It's that oil is not moving right now. I think the big part of this story is not that oil moved last week. It's that oil is not moving right now. Oil is down. Natural gas is up. Oil is down because there is no disruption to the Strait of Hormuz, at least not yet. This is the critical aspect to watch. Cannot express that enough. If we start to see mines laid down or missiles flying or ship traffic impacted at all in the Straits, then oil is likely going to pop by a lot, but it will not until that happens, and let's hope it doesn't.
It's all the concerns we've had. That, by the way, the market doesn't seem to care about it.
Everyone is very, very focused on where oil is moving.
The market-moving event, in my opinion, is closing the Straits. And if that were to happen, then we'll have a conversation about where does crude go, where does the S&P go. But short of that, in terms of the market, it's sort of business as usual.
What is the broader significance of this that people should understand?
The artificiality of the financial markets and globally, and that when there is a very panicky sell-off, that's being allowed to happen, made to happen, orchestrated, just to know that. So when the big collapse is happening, it is the time of their choosing when that will happen. The only variation on that would be, say, and I don't want to get into talking about the conflict right now. Maybe that's a separate discussion. Mm-hmm. But I will say that if the Strait of Hormuz is closed, that will trigger a major financial collapse. And that's why it's being avoided, because there will be real world consequences to that when that happens. But in a sense that has been planned for, that could be what's intended, is that eventually that will happen. That has the potential to collapse the derivatives complex. Absolutely. And
shouldn't just the announcement that they're thinking about doing that cause a rise in the price of oil?
It should, but it's not happening. And well, let's talk about that a little bit. Why it is not happening, because in reality, there is abundant oil in the world. There always has been abundant oil supply. The only way they've held oil prices up is by keeping oil off the market for decades through creating instability and pariah states and keeping oil off the market. There's plenty of oil in the world. The market is in oversupply of oil, and especially because the global economy is probably contracting now. So if to collapse the whole system, what would be needed is something like closing the Strait of Hormuz and the Red Sea, which could happen.
The Iranians have been jamming the GPS systems through the Straits since Sunday.
Ships in the area have reported electronic warfare interference, with their global navigation satellite systems jammed, risking miscalculations and even deadly collisions.
A massive fire has erupted aboard the tanker Adeline in the Gulf of Oman, after a violent collision with another vessel, the Front Eagle.
And the naval commander said that he's ordering it closed. So it's
well, there is signaling. There is signaling that we could do this. This could happen. And but the financial markets, so it's not just oil. Oddly enough, it's everything. It's the equity markets, dead calm, gold, everything, and globally. But meanwhile, nothing has really improved in anything since the 13th. So why is the equity market at a needle-like high at this point?
Can you describe to me the relationship between the real markets and the financial markets? How financial markets can influence the price of real things?
Well, a long time ago, when the derivatives markets were first being created, prior to that, you had real physical markets, supply and demand, determine price levels. And they found when they created contracts for physical delivery, these are the derivative instruments derived based on the real physical thing. The value of the contract complex almost immediately would grow to about 10 times the size of the physical trading market. So the financialization phenomena almost immediately is about 10 times the scale in terms of the value of the contracts traded on the physical thing. So what happens is it's a wag the dog phenomena, where the trading in the financial phenomena, the financial markets, the derivative markets, actually end up determining the price level in the physical market. And this is what we have seen with gold for a long time, where gold could be sold heavily on a paper basis that would then determine the price level in the physical market. So that can be done in either direction. We know that basically unlimited amounts of money can be created in order to step into markets and bracket things in this way. If losses occur in these contracts, they can be buried. They can ultimately be housed in the public-facing entities when there is a failure, so that the public bears the cost of those. But it's also possible to set up entities. The central banks can set up entities. They don't have to disclose these anywhere, and create the money that out of nothing that is loaned into those entities to intervene in the financial markets. So they can do this on a massive scale. And I think I've highlighted this before how do we know this? During the last financial crisis, they almost overnight, in a matter of a few days, created an entity to liquefy the entire commercial paper market in the US, which was about $1.5 trillion. They just created that money out of nothing. And then they did the same thing to take tens of billions of dollars of bad derivatives bets off the balance sheets of the banks and house them in main lane 1, 2, and 3. Now they made those public at that time because it was during the crisis, and they had to disclose to people that they were intervening in this way. But they can do that, in central banks globally without anyone knowing what their interventions are. So there's in this time of where the markets are signaling that things just dead calm, in contrast with what is happening in the real world, this is the kind of intervention that is going on in the background.
Iran is reportedly threatening to close the Strait of Hormuz, a vital oil shipping route.
If Iran does close this strait, how does it impact Americans here at home at the pump?
That channel is the only way to ship crude oil from the Persian Gulf to the rest of the world. 20% of the world's oil passes through the strait. Any disturbance will have a significant impact on the global economy.
So I was really scratching my head this morning as well, because we're looking at a 78 handle on Brent. Now, I think what's interesting, though, is because when these strikes first came about from Iran into Israel, we did see oil spike by about $10 a barrel, and it hasn't really come below 77, 75.
It's just unusual that you see these tectonic geopolitical events and the prices are just like a calm day on the ocean.
Yeah, so it shows the hidden hand and the scale of that power.
Yeah, it still makes my head rack. Like how could you hold down a whole oil market like that, or gold with all these global players?
It's intimidation at a certain point, because there are real market participants, but they get in line. So the price is set at the margin, so to speak, and they have been disciplined. They know that they are not going to argue with that price level, and if they try to go against it, they will be hurt. So people get in line in the markets with they may not understand it. It may just be kind of an animal instinct, but they go along with it.
Well, thanks. I think people find this helpful to understand where we're at. What are the implications of the lack of price actions we've been seeing since the start of the Israeli-Iran war?
Well, it's completely the degree of artificiality is there on display for people to see. So draw your conclusions. They're not real markets. You're completely at the mercy of forces that are beyond your control. No analysis that you do will tell you what is about to happen.
Do you think there's and this is, I guess, off the record or whatever, but do you think it has something to do with Israel losing the conflict, that they're trying to hold it calm?
I have to say that I'm not certain of the purpose of holding it so calm, that they wouldn't want any volatility right now in the financial markets. I'm not sure the strategic purpose of that. I know it may be that they want to be able to pull that lever at the time of their choosing, so they have timing to these things. Mm-hmm. So they don't, a lot of this is just affecting the public mind. You can see people are glued to what is happening day by day in this conflict. And having the stock market collapsing at the same time, they're saving that for another episode. Tune into our next exciting episode when the global financial system begins collapsing.
Save it for your birthday, bar mitzvah.
Yes.
What is going on here? But yeah, I guess that part of the show isn't ready to be put on yet. Huh?
That's another episode.